Good morning. Welcome to Currency Change Daily Markets Update on Thursday, 24th of October 2013. My name is Laurent Guilbault, Managing Director at CurrencyChange.com, local solution for international payments. For the US, the dollar slid to a two-year low yesterday versus the euros, as sign that US growth was hampered by a government shutdown. Fueled speculation, the Federal Reserve will obviously push back the timing of monetary stimulus reductions, as we've said for weeks. The US dollar index is approaching the lows since in October 2012 and February of this year, around 79. And this is likely to be tough to break without further clear US news on Fed tapering and problematics with debt. So the US dollar remains under pressure. The dollar slid yesterday 0.3% to 138.13 and reached a weakest level. The US labor, in terms of statistics, the US Labor Department may say today the number of people continuing to receive jobless benefits climbed to 2.87 million in the week through October 12th. In Europe, apart the problem of Angela Merkel Phone Act, we have in statistics an advance index which would be released, mainly all the PMI indices expected at 52.4 this month from 52.2 in September. Flash PMI data for France, Germany and Eurozone will be the main focus for the Eurozone, and better than expected numbers should be necessary to extend the euro strength, which is already pretty high against the dollar and probably against sterling. In UK economics news, we will have the CBI, which is publishing its quarterly industrial trend survey. The British Retail Consortium is releasing its quarterly employment monitor and the monthly automotive figures. They will all be published at 9:30 UK time. The pound approached a 3-week high yesterday versus the dollar, and still at the moment, before a report economists said will show a measure of new orders at UK factories rose to the highest level since 1995, which is again a good sign for the UK economy. But sterling, though, was little changed against the euro, and still this morning, before Bank of England Governor Mark Carney held a press conference at an FT event this afternoon, the Confederation of British Industries Manufacturing gauge increased to 10 from 9 in September. That's what the market expects. The pound rose this morning again against the dollar to 162.09, which is clearly particularly the highest level seen for 2 months. In terms of GBP underperformance against the euro, the explanation is that in the last couple of days we have seen a decline in UK short end yields over the last days, which then benefited to the euro. In Asia, China's PMI was quite strong at 50.9 this morning. However, China's money rates jumped today after the central bank withdrew cash from the financial system, raising fears in China of a repeat of the liquidity squeeze that rattled markets earlier this year. They have real estate prices completely crazy there. In terms of live exchange rate, sterling dollar 161.70, sterling euro 117.54, sterling Australian dollar 167.90, sterling New Zealand dollar 192.71. The economic agenda UK time for today. So we'll start at 9 o'clock by the Eurozone market manufacturing PMI, expected 51.4. We'll have then at 1:30 US dollar initial jobless claim, expected 340. The US dollar trade balance, expected minus 35.5 billion dollar, and then the PMI. 3 o'clock US dollar new homes, and then we'll have the speech of Governor Mark Carney around 5:45 tonight. If you require further information, please visit now currencychange.com or contact us on +44 0273732686. Have a nice day.